All right, let's turn to the AFEX commodities market. The week that ended November the 1st saw the number of contracts, total value, and number of deals traded at the commodities market all in the green. For more, here is Oluwafemi Kehinde, structuring and origination analyst at AFEX. Good morning, Oluwafemi. Thank you for joining us. First, take us through the week's activities.
Morning, Chimeze. It's amazing to be here. So for the commodities market this week, we actually saw a significant surge in activities in terms of the value traded, the volume traded, and the number of deals executed. The value traded actually surged by about 70%. The volume traded actually surged by about 124%, seeing the execution of 115 contracts executed on the exchange. For the number of deals on the exchange, we actually saw that there was a significant surge as 71 contracts were actually executed for the week. However, the indexes on the exchange actually remained the same as the previously reported week. For the spread of commodities traded for the reporting week, grains actually were the market leaders for the week, as we saw soybean topping the chart, followed by maize. However, we saw a significant increase in the trade of cocoa on the exchange for the reporting week. For contracts traded on the exchange, in terms of the commodities prices that we did, that was executed on the exchange for the reporting week, most of the commodities actually remained the same as the previously reported week. However, we actually saw a significant decline in soybean contract, which declined by about 14.10% compared to the previously reported week. And this might be attributable to the fact that a lot of these commodities are slightly entering into the market, and we envisage this trend to continue over time.
Now, Oluwafemi, we are currently on the harvest of new commodities for the incoming. Where are we on the harvest of new commodities for the incoming season?
Great. Amazing question. So we've actually observed the trend because AFEX currently tracks about 400 open markets across all regions and states in the country. And we've observed farmers are beginning to enter the markets with new commodities. And this is actually going to spur the trade of new commodities by traders and processors. We actually expect this trend to continue in the incoming weeks up until December, as especially for the grain producing states.
And how will the current climate change talk shape activities in the commodities market for the incoming weeks?
Amazing question. So as rightly reported by NIMET, we've observed that for the grain producing states like Kaduna and the likes, the level of rainfall has significantly dropped, right? And we know that farmers actually utilize the sun in drying their commodities in order to get favorable prices for these commodities. So we understand that as a result of the rainfall, we know that more commodities will be introduced in the market, as farmers will be enabled to dry their commodities better and faster and earn more money quickly for their investment.
All right, thank you very much, Oluwafemi, for your time there. In the meantime, AFEX released its crop production outlook report that was on Tuesday. Let's have David Ibidapo, a senior research analyst at AFEX, to tell us more about this report. Hello, David. Good to have you on the program. Good morning.
Yeah, good morning. I'm happy to be here.
So briefly tell us the motivation behind AFEX crop production survey. This is the second of its kind, isn't it?
Yeah, this is the second of its kind, and we started this journey last year, and we don't intend to stop. So we at AFEX, we believe that the agricultural sector holds a lot of potentials, and it's actually key in driving the general economy when you look at the growth potential of the economy, right? And as a result, we believe that unlocking these potentials in the agricultural space, we require policies, and not just policies, but data-driven policies, right? And also, if you look at the trend over the years, you will notice that investment into the sector and also financing in the sector has been low. And if you look at the NBS data, the NBS pegged capital importation to the agri space at about less than 3%, right? And that's very, very low. And we believe that for us to be able to drive investment, for us to be able to unlock finance, we must have to de-risk the sector. And one of the ways to de-risk the sector is by closing up that knowledge gap that currently exists in the agricultural sector. And lastly, for me, I would say that that it's important for us to accurately forecast of production levels and where prices are heading, and this will actually help the players in the agricultural value chain to take position ahead and during the commodity trading season.
So what were the major findings during this year's survey, and how do you see production levels across commodities this year?
Yeah, thanks for that question. Three major findings for me, amongst other findings, is the fact that we saw that about more than 70% of the farmers that we surveyed actually had more than 10 years experience. But however, shockingly is the fact that if you look at the hectares that they've cultivated or the farm size that they own, right, it's just between 1 to 5 hectares, which actually insinuate that over the years, despite their several years of experience, they've not really been able to extend their farm size, and which we believe is actually critical in boosting the production levels across commodities in the country, right? So it's very, very important for us to start looking at, or start having discussions around how can we graduate farmers from a small scale level to a medium scale level and ultimately a large scale level. Then also we saw that farmers before the planting season are already taking position to take advantage of high prices of commodities. So when you look at the rally that happened between last year and this year, that's 2020-2021 commodity season, we'll see that prices, most of the commodities, their prices reached an all-time high. So farmers were already positioned to take advantage of these high prices, and as a result have shown their interest to sell more bags upon harvest this year. For our forecast around the commodities, we are looking at a potential 3% increase in maize, in the production levels of maize. For paddy rice, 10%. For soybean, around 12%. For sorghum, a marginal increase by 2%. For ginger, 4%. And for cocoa, we are anticipating a decline of -8% at least.
Now, aside from these general findings, what were the major challenges faced by farmers this year, and do we see possible policy directions?
Yeah, so not surprising for us, actually, is the fact that long-aged challenges around low access to finance, low access to inputs, low access to storage facilities still top the chart for farmers this year, right? And we believe these are potential policy directions that the federal government and also even private organizations like AFEX can continue to drive to ensure that we stimulate and promote food security in Nigeria, right? So when we talk about low access to inputs, right, most farmers are still challenged with these, and that's why at AFEX we have prioritized building an innovative product that helps unlock finance to help procure inputs for farmers that we believe would help them and ease their activities during planting season. And also for low access to storages, one of the things we've done, which we also recommend for the federal government, is to heavily invest in storage facilities. Like at AFEX, we have over 90 storage facilities across the states. And we understand that without these, farmers will only be constrained to produce what they can store. And increasing capacity would be a very difficult task for farmers.
So how should we expect prices of commodities to behave this year? And what is your outlook in the first half of next year?
Okay, so for prices this year, so coming from the rally that we experienced in the 2020-2021 trading season, we expect prices across commodities we expect them to decline upon harvest, which we're already seeing that trend, right? We expect prices to start at a higher minimum base price across commodities. So, for example, for maize, last year, price of maize began the season at around 130,000 metric ton. 130,000 naira per metric ton, right? But this year we're already seeing maize price around 170,000 naira per metric ton, right? And this is the minimum base price I'm talking about, and we expect to see this across all commodities. The marginal decline that we will be seeing upon harvest, I believe, will be short-lived, and what will be driving prices next year will majorly be the stronger demand of commodities that we are seeing currently in the market as against last year, amid other fundamental factors that we believe would also drive prices. And we think this is a potential signal to inflationary pressure. That's our headline inflation, and most importantly, our food inflation for next year.
Right. David, thank you so much for your time this morning. We do appreciate it. Enjoy the rest of the day. I will take a moment.